Hi, this is Erik Epp, and this is a weekly summary for the week ending November 12, 2010. Here is a table that compares the end of last week to the end of this past week, which is November the 12th, and also the end of the last options months to the end of November 12, which is this past week, which makes it a 4 weeks so far length in options months. So a couple things to look at. For the week the market is down, as you can see. Also you can see obviously the difference in the prices, and the volatility index is up slightly from 18 and a quarter to 20.6. For the month the market is slightly up, as you can see, and there is a slight difference in the increase in the volatility index. Here is a chart of the SPY, which is SPX ETF Spider, we call it, for the past 3 months. On the top we have the white line, which is basically the SPY closing prices. We got the purple line, which is a 20-day moving average, and we got the orange line, which is basically the trend, the trend line. Basically, as you can see, it connects the lows for the SPX during the past 3 months, and if you notice, it's penetrated for the first 3 months. It's going below the trend line, and it's also penetrated the 20-day moving average. In the middle we got the volume, and you can see the white line, which is basically the 50-day moving average for the volume, and if you notice, it's sloping slightly down. In other words, the trend of it is slightly down, not by much, but slightly down. Here we have the relative strength index, which basically measure the relative strength of the market movement, and as you can see, it reached the top right here, which is above the 75 or 75 line, look like, which correspond to this top here, and then started to go down. As what it's starting to move strengths, it's going down, as you can also see by the yellow or the orange line that indicate that. And the last indicator is more of a momentum type of indicator, which basically takes 2 moving averages and then another moving average of the first 2 moving averages. It's a little complicated, but don't worry about it. Basically, the white line is for the 9-day moving average, and the red line is a combination of the 12 and the 26 moving averages, and when the red crosses above the white, the market is going up. As you can see right here, start to go up, and it looks like here where the green arrow is, that the red is just about ready to cross the white line to the bottom, which could indicate a reversal. So what all these suggest? A market reversal even for a short period of time. Market is up until now was driven by cheap money, thanks to the Fed and its cartel members and bodies, which is basically the big banks and the major Wall Street firms, who basically are what driving the market. So it's basically a propping up type of a market, an artificially propping up of the market, which perhaps will create even a bubble, and the question is how long this propping can last. So we are getting to the end of this one. As always, keeping it simple is smart, which is an acronym for KISS. And thank you for visiting us, and please visit us on the web at kissoptionpicks.com, or call us toll free at 1-888-266-4137. And once again, thanks for watching, and until next time, hasta la vista.